Good evening. You may have heard that the UK government is going green. Some are saying that the Conservative Party have almost becoming the Green Party. They're really pushing this green agenda. And the latest thing now is that they want to phase out. Well, we know that they're going to phase out gas boilers by 2035, or certainly stop new boilers being built, in the next few years, really. And I've mentioned this before, but now they're announcing millions of pounds worth of grants to help people switch from the traditional gas boiler, which for many years has come from the North Sea oil fields, into this these sort of electric heat pumps. And a lot of new properties already been built with all electric heating, all electric heating systems and cooking systems. Gas is already been phased out, and yet I remember years ago North Sea gas was being hailed as this clean energy. This, they used to have adverts on telly, clean energy in fields and meadows with this clean gas coming out. So suddenly it's like it's the enemy of the world. It's a bit like when we were told to drive diesel cars. They were better for everything. They were better for the planet. They even had less duty on diesel cars, and everyone was rushing out to buy them. And then you had to pay more for them, so you probably didn't save much anyway. But now diesel, they don't even want you in London with a diesel car. They charge you extra to park in central London just because you have a diesel. When you phone the number, it says we have a diesel surcharge. So just to park your car there, which is not burning any diesel, you're charged extra in London boroughs like Westminster and Camden. So it's all going a bit crazy in my opinion. But on the financial front, I've already told you that interest rates are likely to go up by December, but the market is now betting that they will go up next month at the next Bank of England meeting. And they've named a figure. They say that rates will go up to 0.25%, that's 0.25%. And this is the market betting against this, like bond yields, and that's already changed based on these projections. Now, at the moment, we've got historically low rates of 0.1%, which is almost zero. And so it's going to go up by just under 0.25%. And this will be raised. Why? To combat rising inflation. The cost of living is going through the roof, and inflation has already jumped to over 3% and is expected to hit 4%, as I've been telling you for the last few weeks, by the end of the year. That's going to affect all sorts of things, not only the cost of living, but it will affect the buying power of your money. And this is happening in the UK, Germany, Europe, and America, which has seen inflation rises going up above 5% for the first time in almost 20 years. So everything it will be going up, and if your salary is not going up to meet it, we're all going to be worse off with inflation. 4% doesn't sound very much, but it adds up over time. And don't forget, this 4% is a fiddled figure. It doesn't really include everything that the price is going up by. It doesn't include everything. I think in America it doesn't even include housing costs. So don't think this is a small figure, and don't think that because you're young enough not to have seen high inflation that it couldn't come back with a vengeance. I've lived through inflation, in the double figures and even 20% inflation. And I know what it's like when a union goes out demanding a 25% pay salary increase. Otherwise, they're going to go on strike and bring the country to a standstill. We're already seeing evidence of this coming out. In Green Brighton, we're seeing piles of rubbish piled up in the streets for the last few weeks as the dustmen have been on strike. So in the UK anyway, going back to the green issue, 90,000 homes in the UK will be offered grants of up to £5,000 over the next 3 years to install heat pump systems to replace gas boilers. Now these heat pumps can cost more than that. I think they'll probably cost £7,000 or £8,000 by some estimates. They're not suitable for older properties because you need a lot of insulation. They kind of work in newer properties. And I believe that the cost of these will be higher to run than a normal gas boiler. So that's another thing. It will increase costs and just take money out of your pocket. It's almost like a green tax in a way. And this is ahead of Glasgow's COP26 climate change conference. The government is spending, they're throwing around 4 billion of taxpayers' money at this as part of their net zero strategy green agenda to create more things like electric charging points all over the place, give grants to have electric charging points installed at your home. and basically phase out all new heating, all new gas heating systems to use low carbon technology, or this new hydrogen technology that's been hailed as the next big thing. So one country that won't be at this conference, this COP26 conference, is the world's biggest polluter, which is China. They're ignoring it. In fact, they're holding back on their rush to go green. They're still producing a lot of their electricity with coal-powered generating stations. So they're still using coal, and we're eliminating it in this country, which I think is a big mistake, because it will mean that the UK and America will rush to get this green agenda through. We're going to wipe out a lot of old industries. Meanwhile, China is going to take its time, and then when we're all wiped out, they'll be ahead of us. And don't forget, a lot of the technology we have to buy in to run this green agenda is coming from China. They're also controlling a lot of the minerals that go into batteries. So how is that going to benefit our economy? I don't think it is. I don't think it's going to benefit the economy of the US either. And a lot of senators have talked about this, that we are virtually giving everything away to China, just like Bill Clinton did when he brought them into the World Trade Organization. And since then, the rise of China has been unbelievable. And America has sold out to China, really. That the country has been sold out by this exporting of jobs, exporting of manufacturing. And a similar thing has happened here. We now totally depend on China for most of our goods and services. And it's not good news for jobs. And nevertheless, Boris Johnson said this will create 400,000 new jobs by 2030. But as I said, much of the technology will need to be imported. Boris Johnson's also announced 10 billion of investment, including from Bill Gates, no less, as part of that. That's another green thing that they're launching, some green funds. And there's a picture of him with Bill Gates, getting into green stuff in this country. But these announcements are made, but where does this money actually trickle down to? I know that the government are issuing green bonds, so they're borrowing a lot of this money to go green. And I think we're doing this with unnecessary haste. So there's a risk of upheaval of the pace of this, and it could cause a major upheaval, commentators have suggested, to traditional industries. It could wipe out millions of jobs before it creates all these new green jobs, as it were. And with increasing technology, a lot of jobs are going to be wiped out anyway. So this is at a time when we need to encourage more manufacturing. And then you've got Rishi Sunak announcing plans to perhaps impose a kind of a tariff on companies based on their environmental damage that they're creating. So how is that going to encourage companies to manufacture goods in the UK? The answer is it's not. They're going to just move it out to a country that doesn't worry about that and says, yes, come along, don't worry about carbon credits, and just put your steel plant here. We'll manufacture everything, and then we're back to importing stuff. And this is why our trade gap is widening. At a time when we're supposed to be doing all these trade deals around the world, the amount of imports compared to the exports is widening. The gap is widening, and that's a worrying thing for the UK. Even though the economy is going up, the GDP is going up, the trade gap is widening as exports are not keeping up with this. Now, another thing that's going to change is mortgage lending could become harder on properties that are considered not to be green. So does that mean you're going to pay a higher interest rate? Does that mean the government's going to somehow bring out yet another tax against us because the house is not properly insulated, or maybe it's an older property? I don't know. I mean, you can't just knock all the old Victorian houses down and start putting horrible double glazing around them and or just building new properties everywhere and just knock everything down, knock out all our heritage. Some properties will never be suited to these green energy pumps, but I think hydrogen can be adapted to fit into existing boilers. So it may not be the end of that good old Potterton boiler that you might have there. We'll see. I mean, I don't mind electric stuff. I don't like cooking with gas, but there you have it. It is far cheaper than electric heating. If you buy a property and you see these horrible storage heaters in it, because the flats, particularly in flats, are all electric usually, just be careful of that. if it's an old style storage heater, first of all, they give out about as much warmth as a candle, and secondly, they're expensive to run. And these small electric heaters on the wall, they're not very good and they are expensive. So just be careful if you're looking at that. Maybe the modern electric heaters are better, but they're still expensive to run compared to gas. Now, as I said a couple of times this week, and certainly in the last week, the stock markets are expected to fall, according to the Bank of England, and could fall by as much as 10% before the end of the year. And I think property prices could follow because there's a bubble in both of these areas. Financial markets and shares could see a sharp downturn with lower expectation of an early economic recovery. This is according to the Bank of England that they predicted last week. So I think it's quite a serious issue. Now, I know a lot of people are talking down the market at the moment and saying there's going to be a recession, a depression, and that sort of thing. But these things can happen because these things come in cycles. We've seen a rapid expansion in the price of shares and property since the 2008 crash. And people are saying that this is largely fueled by the amount of QE and money printing, quantitative easing, money printing, borrowing, which is artificially fueling this huge growth in the price of properties, not just since the pandemic, but since 2008. It's money printing on an industrial scale never ever seen in history. And that party, I believe, must come to an end. You cannot just go on like that because eventually they're just going to run out of ideas. And when they stop printing, they're already tapering out the money printing and the money that's just given away to everybody in America and here. So when that stops, that will suppress the economy. They can't just keep artificially creating these bubbles, these property bubbles, these stock market bubbles. Eventually the party's got to end. And this comes from very wise investors I've been researching, and they also say the same thing. This is why Warren Buffett is sitting on hundreds of billions of dollars worth of cash. He feels that there's not enough good shares around worth buying at the moment because they're all too highly priced. And if you look at the American stock market, a lot of it is propped up by the FANGs, the big technology companies, the Facebooks, the Apple, the Alphabet, which is Google, and companies like Tesla and that sort of thing. So these Tesla's not in one of the FANGs, by the way. It's Facebook, Apple. Yeah, Apple's the other one. So that Netflix is the other one. So those are the sort of companies that are the amount of their share price rising is artificially making it look like the stock market is booming. But if you take those out of the equation, the performance in the stock market has not been as good. So I don't think that can just carry on forever. It's just not possible that it can just carry on like that forever. And every country in the world that's gone through this mass money printing, going back to Germany, the Weimar Republic, and even before that there were countries that printed money and it went wrong. The Weimar Republic, you had Argentina a few years ago where they had inflation's running at hundreds of percent, Zimbabwe, Venezuela, which has destroyed its currency through money printing, and yet they're an oil-rich country. It's always ended in tears, and we're already seeing the effects of this now. We're already seeing inflation coming through. Now, 4% doesn't sound a lot, but it's double the Bank of England's target. Now, maybe they'll change their target now, but they wanted to keep inflation under 2%, so it's double that. So 2 to 4% doesn't sound a lot, but when you think it's double, it's already 50% up on it, 50% rise. Now it's going to be 100% rise, double the amount that they want inflation to be. And this is after the Bank of England and the Federal Reserve said inflation will be a temporary blip in September. So I don't know what sort of thing they're on and where they get these figures from, but they're supposed to have their fingers on the pulse, and yet it doesn't seem like they have. So how can you protect yourself from a property and stock market crash when this bubble does eventually burst? And it will burst. Now, what I would say is fortunes have been lost during depressions, recessions, stock market crashes, and property market crashes. Fortunes have been lost, but also fortunes have been made as well if you know what you're doing, if you're financially educated and you're financially aware. You can make money during these times. In fact, a lot of people are waiting for dips in the markets to actually find something worth investing in, to find value investments, whether that be in stock markets, like we're talking about Warren Buffett, or whether it be in property markets. It's very difficult to find any value. If you look at stocks, they're already, the PE ratio on stocks is already way too high. And this happened in Japan in the 80s when PE ratios went up to an average of 65, and it then crashed. It's never recovered. Their stock market has never recovered since that late 80s crash when their markets were going up by, almost treble figures in a year. So, and one time Japan was going to take over everything, wasn't it? Just like China is now. And yet China's economy is also faltering at the moment. So how can you protect yourself? There is money to be made during the dips if you know what you're doing. You can make money on the stock market if you know what you're doing during the dips, not just by buying anything that goes down, but by knowing how to study the market, knowing what to invest in. And the same thing with property, not just by going out and buying any property because it's cheap, because you might find a property that's cheap at the auction, but there's something wrong with it. So you've got to know what you're doing. But I promise you that money can be made during a crash. And I don't know when this crash will come, but I know that there will be easily a correction. Stocks can go down very fast. Property takes longer to happen. But clearly, if the fundamentals are not right in the economy, and we see the economy faltering, inflation going up, that has to have an effect on things. It must do. And when interest rates rise, that will affect. That always affects the property market. Now, a small rate rise is not going to dent it too much, but if rates have to keep going up, that's always had an effect on the property market. This market at the moment has got lots of cheap money around. You can get mortgages at less than 1%. So of course, it's easy to get money thrown at you, to get money from the bank of mum and dad who remortgage their house at a low rate as well. And yes, a first-time buyer can go out and buy a property for £600,000, £700,000, which is crazy. When I started, it was a little flat. I couldn't even think about buying a house at that time, even though house prices at that time were probably, 3-4 times average salary. Now they're 15 times average salary in many cities around the country. Yes, there are still cheap properties up north. There's still cheap properties in Wales, but even some of those markets have gone up rapidly. So you need to know what you're doing. If you keep an eye on my YouTube videos, my Facebook videos, my podcasts on iTunes, I'm always talking about property. I'm always talking about the markets and investing, because investing is the only way you can become, I believe, financially free. You can earn as much as you like, but if you're not managing your money, that you won't keep it for very long. So you've got to learn how to invest. Now, putting your money in the bank at 0% is not really investing. That's just depositing money there to keep, in cash almost. Investing is putting your money into real assets. That includes properties, stocks, could be gold, precious metals. But the main route for most people, and this will be in your pension fund as well, there's only three main areas. That's property. In pension funds, that would usually mean commercial property, but it's still property. Stocks and shares, the stock market, and some in bonds, which are slightly safer, but they are traded bonds. And those are the three main areas that people invest in. Yes, you can go and invest in gold coins and take a chance on that. You can invest in cryptocurrencies and antiques and fine art and these sorts of things. But these are specialist areas. They're not considered the mainstream in terms of investment. And so the things you need to really learn about if you're investing for most people would be the stock market or the property market. And many people in the last few years have turned to property. Why? Because it's more tangible. And secondly, because you can borrow money to buy a property, which you can't generally do to buy stocks and shares. I think the last time that was a big thing, that you could borrow 2/3 of a share price and use the shares as security, was before the 1929 stock market crash. So I don't think that's coming back soon, do you? But you can borrow money apparently to buy cryptocurrency. Well, what does that tell you? And I would be very careful about cryptocurrency. I know I'm not a crypto fan, but you've got to make your own choice. But a lot of commentators have said never invest more than you can afford to lose. Yes, if you want to take a punt on it, a punt means a gamble on it, then fine. Put some money in that you could afford to lose. But Bitcoin yesterday was up to $60,000 again, and it's up and down like a yo-yo. So just be careful with that. But if you're looking at a long-term investment, then the stock market and property are usually the best long-term bets, looking back over hundreds of years. So if you want to learn more about these things, follow my YouTube channel, subscribe, like it, and also look at some of my videos that I'm putting out here for free, my training videos, and maybe think about my coaching programs, which can help take you through to become financially free without working any harder than you are now. And we can quickly turn around your finances and set you on a path to become financially free through managing your money, but also through investing, whether the vehicle be stock market or in property. So thanks for listening. Just keep an eye on things. Be careful out there. Don't go, remortgaging your house to buy cryptocurrency, because that's a huge risk. But remember the things that the bank will lend on. That's property. Why? Because they think property is a safe security to lend on. They don't think buying, stocks in Apple or cryptocurrencies is safe security. So they won't take that as security for the loan, but they will take the property you're buying as security for the loan. Do you see what I mean? So thanks for listening. Check out my videos and my links down below, and have a great evening wherever you are at the moment. Thanks for everyone tuning in on Facebook, YouTube. Please like and subscribe, share, whatever, so this free stuff can get out to more people. Hi to Ronnie there, over there in Scandinavia. Nice to see you, Ronnie. Thanks for your support, and I hope the property market there is going well as well. Thanks a lot. Cheers, and bye for now, everybody.